Hi everyone, Piotr speaking. This is the Forex update. For the currencies I trade personally. Okay, I would like to start with Euro US dollar. There was a question asked concerning my labeling on the charts, and a person asked me to label it more carefully and more precisely. Yeah, you might be right, yeah, but as you know, it takes so much time to analyze, and especially labeling on according to Elliott waves. So sometimes it's not that easy to keep it all the time updated. Okay, if you keep watching my videos, you will learn how I analyze the market, because I try to keep it as simple as possible, and sometimes you may lose or invest so much time in order to analyze all the moves, all the small waves, and all the relationships between the waves, that you won't be able to trade, because all the time you will be seeing some different stuff. And as you, or many of you has probably heard about it, yeah, Elliott waves help you to find what is more possible. Yeah, so what is more possible, where the market may go. It doesn't give you the 100% right answer. Yeah, so you must be to some extent flexible. So that's why I'm using different techniques, and I do analyze Elliott waves a lot. And yeah, this is the one current situation on the Euro US dollar. As I said in my last weekly analysis, that might be an first wave up, so an impulse. That might be a correction in ABC, and you can see it here on the daily chart. It's A, B, and C, very precisely, very exactly to the 161 Fibonacci level. And here, if the market goes up, keep going up, and break this level. So that will be an information for me. Okay, we had a 1 and we had a 2, and that's most probably the third strongest wave. But if you have a look on the 4 hours chart, okay, a 3 wave down ended here in this position. Okay, so that was a kind of correction here, a kind of ABC. And if you treat it like A, B, B, and if you try to measure, that was, wait a second, that was an A, and if you put it like that, you've got a target for the C, for the wave C. So a big A, a big B, or bigger, and a bigger C. So that's why the market is currently reacting to that level. Okay, and at the same time, if you measure the whole movement here, so if it was a first impulse, downward impulse, you can notice that, okay, and that's the typical 61.8 Fibonacci level where the market has also reacted to. Okay, so there are different techniques to analyze it, but on the other hand, I've just said that we may have a strong third wave up, the strongest wave up. Yeah, so I use a trend following system. It's one of my systems, and you can see here that the market moved from the Bollinger lower band to Bollinger upper band, did a correction. That wasn't that deep. It wasn't actually. It should be a more deeper, to be honest with you, but broke above this 100 level. Okay, so, and this generates a long trade. Okay, that might generate a long trade. So I will watch it carefully what the market will do in this area once again. If the market turns around once again, I will start thinking, okay, the market may want to go up, still go up. Okay, so that is the situation on the 4 hours chart. And we had the reaction to the Bollinger Middle Band last week. So an upward movement is still possible. It's still possible, especially we had this strong green candle on the monthly chart, and those two candles might be a correction candle, especially this August candle. So we still may keep on going up. Good. So I think that's the most important thing for on the 4 hours chart, and the most important thing to consider, in my opinion. Okay. So that's not that clear yet that that here that a downward movement has already started here. Okay. So you shouldn't rule it out. Good. So that's the Euro US dollar. Euro Japanese yen. Yeah, the weekly candle. We had a break through this 100 Fibonacci level and had a long trade, actually with only 15 pips target or something like that. Yeah, roughly 20 pips. So that wasn't that much. And now the market is going down a little bit. Yeah. So the question is whether the market is going to turn around once again, somewhere here, and start moving up again. So that is what I'm asking myself. And you can see the first reaction here already. Okay. So that might be a correction to this upward movement. On the other hand, I will show you in a few minutes other currency pairs with Japanese yen, but on the other hand, we can consider this level still as a correction for this downward movement. That's the 88.6 Fibonacci level, also typical for a correction. Okay, so the market still might be in a correction, and I had an account like 535, and this 5 wave movement has ended here as well. Okay, so that might be a big A, a big B, and a big C here. It's still possible, and the market may make a reversal signal here. Okay, so that might be a good, let's say doji evening star. Yeah, okay, we've got a strong green candle. A red candle looks like a maybe not a perfect doji, but it's a kind of correction candle. And here we may have a strong red candle. If it's like that, that will be a strong reversal signal. Okay, so we can wait for the RSI to break down this support line. If it happens like that, there is the high chances that the market will try to break through this support line. Okay. Good. So yeah, I think that's the most important thing. I think. Yeah. And yeah, this on this 1 hour chart, the MECD indicator has already broken through this zero line. Okay, so this is also an indication that the market, that the bear is a bit stronger. Yeah, that the sell-off has already started. Okay, and that might be continued. Okay, let's have a look on the Japanese yen, Great Britain pound Japanese yen. On a weekly chart, I was talking about this butterfly pattern, and this butterfly pattern has reached this 161 Fibonacci level, very typical for a butterfly patterns. Okay, I usually locate them based on my experience. I used to not to measure them so precisely, yeah, because I thought it's a bit easier than just looking for the all exact Fibo levels, yeah. But in this case, this butterfly pattern reacts to this 161 Fibo level, so it met this rule as well. Okay, on the daily chart, we've got an upward channel most probably, and the market is reacting to the upper boundary of this channel. Okay, so that's why the market is reacting here and making this doji evening star formation most probably. Okay, we have to wait for it to build, but it has already started. Yeah. and you can see it on the 4 hours chart as well. So that is the reason why the market yesterday reacted to the situation. The more difficult situation, the difficulty on that was that the whole day yesterday, okay, in Europe, yeah, so the market was a choppy market, yeah, so it wasn't that easy to enter. Yeah? We can call it, yeah, it was very easy, yeah, because when you see it today, you can say, yeah, it was super easy, yeah, oh, just open a short position here and you could have 100 pips, yeah, right. But I had a long trade setup based on this blue Fibonacci level. Okay, this is this trend following system. Okay, so the market moved from Bollinger lower band up to Bollinger upper band, did a correction and started going up and broke through this level. And typically, in such cases, the market reaches this 161 Fibonacci level. Yeah, and we were close to that. Yeah. So this was one of my positions, and I can show you this position. Wait a second. Yeah, my first signal sent in September. So this is this buy stop signal. Yeah, and if you watch it closely, you can notice that the market was able to reach even the TP, the second target. Okay, the second taking profit level, and is actually was actually much higher. Yeah? So what it shows that all the system based on trend following, they are really strong. Yeah? Then they may give you a lot of profits. Yeah? The disadvantage of it is that the position was approximately 70 pips in minus. Yeah? But could give you almost 400 pips or 350 pips profit. Yeah, I had this first take profit. The first level, actually only 23 pips. Yeah, unfortunately, and then I was thrown out from this position. Yeah. But anyway, keeping and letting market to develop and letting the trends to develop is actually the best way to trade. Yeah? So it shows. It confirms this rule again. Okay, but let's concentrate on that again. And I've got here a support line, and the market may react to this support line. Yeah, either it will be broken, or the market will make a reversal signal here again, and try to move up again and try to reach this level. Okay, because based on this count here, if it's the first impulse, so that's the 1, that's the 2. If you measure it, this green Fibo, this Fibo measures this movement. Yeah. So if you wait a second, I'll show it to you how to do it. Okay. So that's the first leg, the first wave. Then you move it to the beginning of the third wave. Third should be the strongest, the biggest one, the strongest, and can reach this 161 level typically, or this 261. Yeah, I think in this case this 161, that will be the target. Okay, so now we can try to analyze and see what the market will do here in this area. Okay, yeah. I've got a short position here based on this analysis, on this count. Okay, that was most probably an A, that might be an B. If the market turns around here, makes a reversal signal here, and keeps going up, I will close this position. Okay, good. US dollar, Japanese yen. A similar situation actually to all those Japanese yen pairs, because the markets, the currency pairs react, most of them in the same way, especially if they've got the same corresponding pair currency in their pairs. So you can see here this breaking through this support line, and that was the short trade setup. It happened, of course, in the night. So I'm sitting in Europe, so all the Asian traders, they most probably have spotted and they traded short here. They went short here. So that is the downward movement here. Now it's the question whether the market will turn around and try to make a retesting of this support line. Sometimes markets does it, and it may be the case, and there will be the second correction. There's a second correction wave, and then the strongest third one. And for those who trade it like that, so this candle, this so that was, wait a second, yesterday? Today. So that's the this candle. So they entered into a position at this level. So they have their stop losses above this top. They should have their stop loss above this top. And they should try to get 90 pips as a profit. So that will be 1-to-1, or if it develops, it may give you an 180, 1-to-2. Okay, so this is one of the possibilities, and some of them they move their stop losses quicker to the break even to the break even point. So if they entered here, they already move their stop losses here. But they will try to enter into the position once again. If they make this first profits, they may say, okay, good, let's take the 30 pips, and I've made already 30 pips, so 60 or 50 pips. Okay, but the question is what the market will do now, and you can see on the monthly chart we are reacting to the tops here, and on the weekly chart we had this candle, this green candle with the long upper shadow. Yes, I think the market is reacting to this upper shadows. So that's the reason. That's the reason. And what I had here, I was thinking about. So that could be an a 1. So one first downward movement, first wave down. That is the second wave. It was very precisely, very exactly reacted to that level. So 1, 2. That might be a 1, 2 again. So this is the third. That might be the third wave. Either is a C, if it's correction, or it's a free. We don't know it yet because we have to break down this level. If it's like that, if it's correct, so that is an impulse. This is a 5-wave impulse, and that might be I had it on the 4 hours chart. So that was 1, 2. This is a 5-wave impulse. So 1, 2, 3, 4. It's 1, 2, 3, 4, 5. It's a 5, 3. It's a big A, big B, big C. So that's the 3 here, and that's another 5. So 5, 3, 5. That would be a zigzag. That would be a correction. And if you measure this distance here, that's the red FIBO levels. So you can see the market has reacted to that 78.6 Fibonacci level, actually in between those two levels. So this is an area. That's not an exact point, but it's in an area, but has reacted quite precisely to these levels. And on the I had a I'm okay. I'll leave it like that. I think that's enough for now. I don't want to make it too complicated, and I don't want to explain all the movements. As I said, it's sometimes really takes a lot of time. Okay, so for time of being, so the question is whether the market will be able to break this top. If it happens, one have to consider whether we are having a new impulse here. Okay, and now the Great Britain pound in USD. Okay, that's the monthly candle which reacts currently to those tops here. On the weekly chart, I have already once explained it. I had this is the 5 waves impulse. That's the one. That might be still a correction. It's a big one, big A, and a big C. And the C movement is this is 335. Yeah. So that was a 3, a big A, a 3 for B, and a 5 wave movement up for C. Okay. So that's why the market is currently reacting to this top here, and we are already seeing some reactions on the 4 hours chart, and we may have first downward movement here if it's the first leg one. So there should be an ABC, a correction, and then a third wave. Yeah, so that will be the strongest, one of the strongest, because most probably there will be more waves, so they will be extended most probably. Okay, but the market actually at the beginning reacted to this 61.8, okay, or to this moving average 200, but broke through this level. Yes. Now is the question whether the market is willing to react to this 78.6 level. So that is the question. And the MACD is moving up, so it's breaking the zero line. Okay, so I'll be a little bit cautious about the situation and not so. So the best way is just to wait until the market will break through this support line. If it happens, most probably the market is willing to go down. And you can see here there is a divergence on the market regarding this area here. You've got a top here, there's a lower top on MACD, and you've got one top here, and there's another top on this on the chart for the instrument. Okay, so this is a divergence, and this shows, okay, the trend change may occur. Good. So there is gold, and gold is breaking through this support line on a daily chart, and it's actually happening at the moment. Okay, the reason for that, in my opinion, is I've mentioned about it. So the MACD indicator on the monthly chart broke through this zero line, so that's why there is a pressure on this metal, on the cells, and we had two dojis, and now it looks like we may have a strong red candle. Yeah, that was here. I had a trend following trade once here, and the market now moved back to this 100 Fibonacci level. Okay, and there is a still chance that the market may reversal signal here and starts going up again. There's still possibility for that, in my opinion, yeah, because this 161 level hasn't been reached yet. Okay, and we had a first top, and there's a second top for the MACD indicator. Yeah, so the market, there was a fresh break through the zero line for the MACD indicator. So in my opinion, there are chances that the market turn around and goes up. Yeah, so that would be 1, 2, and 1, 2, and then the third leg, the third strongest one. Okay, but okay, that's all for now. Thanks for watching, and hope to see you soon. Thanks. Have a nice day. Ciao.